Ladies and gentlemen, good day and welcome to the Q1 FY2024 earnings conference call of Rupa and Company Limited, hosted by Orient Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Khaitan from Orient Capital. Thank you, and over to you, sir.
Yeah, good afternoon, everyone. Thanks for joining us on the call today. We are joined by the management of Rupa and Company Limited, represented by Mr. Ramesh Agarwal, Whole-Time Director, and Mr. Sumit Khowala, Chief Financial Officer. Before we begin, I just like to give a small disclaimer that this conference call may contain a forward-looking statements which are based on the belief and opinion as on the date of this call. These statements are not the guarantees of the future performance and involve risks which are unforeseen and difficult to predict. A detailed disclaimer has been added to the reference presentation which was uploaded on the exchange. I hope everyone had a chance to go through it. With this, I now would like to hand over the call to the management for their opening remarks. Over to you, sir.
Hi, I'm Ramesh Agarwal. Good afternoon, everyone. I would like to extend a warm welcome to all of you on behalf of Rupa and Company Limited. We appreciate your presence on this call and as we discuss our financial results and provide insights into our company's performance. I trust you have had the opportunity to review the financial results and investor presentation that we had shared on both the stock exchanges and on our company's website. During the quarter, our year-on-year revenues were impacted by the prevailing market conditions. Despite these challenges, we continue to navigate the market with determination and strategic focus. Our revenue for the quarter stood at 195 crores, representing a degrowth of around 9% year-on-year basis. However, it's noteworthy that we had witnessed growth in volume of around 5% during this quarter. Also, pursuant to the various celebrities onboarded in the preceding quarter across different product segments, the advertising campaign pre-planned resulted in higher advertising expenditure during the quarter at the rate of 12% of the revenue. Going forward, advertising expense shall stand between 7 to 8% of the total revenue. Our athleisure segment sales remained relatively flat. On the other hand, we observed a commendable 19% volume growth in the economy and the mid-economy segment, highlighting our ability to capture market opportunities across various segments. The premium segment also showed promising growth with a 12% increase in volume and significant value expansion. This is a testament to our commitment to offering high-quality products that resonate with discerning consumers. Additionally, our strong focus on expanding our retail presence is evident in the increase in exclusive brand outlets, EBOs, which now stands at around 29. While we face challenges in the export sector, we are pleased to share that our order book remains robust. This is supported by the recent commissioning of our export unit, which positions us favorably for future growth in this area. In the domestic market, our presence in the modern trade and X Factor contributed to around 11 crores and rupees 32 crores respectively to our revenue during this quarter. Looking forward, we anticipate a positive shift in market sentiment and an increase in demand as yarn prices stabilize. Our proactive efforts to enhance our brand visibility have led to the collaborations with renowned celebrities aimed at promoting our premium and economy segment brands. Consequently, our advertising spend was 14% of our top line, amounting to rupees 24 crores due to these strategic partnerships. And going forward, as I said earlier, that it will be maintained at between the range of 7 to 8% of the annual revenue. From a financial standpoint, our net debt currently stands at around 33 crores. Moreover, diligent focus on managing working capital has resulted in a reduction from 789 crores to rupees 700 crores. That's a reduction of around 90 crores, indicating our commitment to efficient resource management. As we project our outlook, we remain optimistic about achieving improved margins. We anticipate that as market sentiments normalize and the impact of underperforming segments lessens, our operational efficiency will yield positive results. Our strategy is centered around optimizing operational processes, managing costs diligently, and seizing growth opportunities to enhance shareholder value. Despite the unique challenges we have encountered in the current year, the management stands behind our performance. Looking ahead, we are confident that over the next 3 years, we will achieve a significant milestone by achieving a turnover of around 2,000 crores. With that, I would like to hand over the floor to Mr. Sumit Khobawala, our CFO, to delve into the financial details. Over to you.
Thank you, Ramesh sir. Hello everyone, and thank you for joining us for our Q1 FY24 earnings call. I will provide a brief overview of our financial performance for the quarter. On quarterly performance, revenue from operations for Q1 FY24 is 195 crore, degrew by 9% year-on-year. The gross margins for the quarter stood at 35.1% vis-a-vis 37.5% corresponding quarter last year and grew by 1170 bits quarter-on-quarter. The EBITDA for the quarter stood at 11.3 crore as compared to 18.5 crore, registering a degrowth of 39% year-on-year. EBITDA margin for the quarter stood at 5.8% for the quarter, down by 280 bits year-on-year. The decline in EBITDA margin was majorly attributed to the volatile raw material prices and which impacted the gross margin as well as significant increase in marketing expenses. The net profit for the quarter stood at 4.2 crore against 12.5 crore, same period last year, declined by 66% year-on-year. PAT margins for the quarter stood at 2.2%, down by 360 basis points year-on-year. Further, there is a reduction in working capital deployed in the business from 789 crore to 700 crore. Cash generated from operations is 95 crores positive, which has been majorly utilized in reducing the debt. Our net debt stands at 38 crore. With this, I now conclude my speech and open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunal Doshi, an investor. Please go ahead.
Good afternoon. Thank you for the opportunity. Since our EBITDA margins remains impacted since last few quarters, so how do you see the EBITDA margins shaping up?
Yeah, good afternoon. Yeah, predicting the trajectory of EBITDA margin in the upcoming quarters is challenging. With domestic demand showing signs of improvement and anticipated increase in margins, it is likely that sales will perform positively from current levels. Consequently, there is a potential recovery in the EBITDA margin going forward. Advertisement and marketing spends will revert to the usual range of around 7 to 8% and will also have a positive impact on the EBITDA margins.
And just a follow-up question on that, and by when can we achieve the same? Like, can we expect the EBITDA margins to stabilize in a quarter or two?
Yeah, gradually there will be, since the yarn prices stabilize, we hope that gross margins will improve and advertisement spend back to normalcy level from 12% to 7 to 8% level. There will be improvement in EBITDA.
Okay. Also, in terms of demand, how is the demand shaping up in the domestic market? And in terms of rise of inflation guidance for FY24, so how do you see that particularly impacting our business?
The last 1.5 year industry witnessed a steep volatility in raw material prices and now witnessing disruptive pricing strategies. Raw material prices are largely stabilized and tough pricing strategies adapted in the industry is a short-term phenomenon and will continue to put pressures on margin in the near short term. We are hopeful that steady measures undertaken by us will benefit the company in long run, and the revenue guidance for FY24 will be in the range of 18-20% growth with an EBITDA margin of around 10 to 11%. As we look ahead, in the forthcoming quarters, our expectation is to witness a growth and advancement in our targeted domains. We remain optimistic that the market will behave positively and thereby contributing and improved sales.
So can we expect H2 of financial year 24 to be much better as compared to H1?
Yes, definitely.
Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Vanshi Shah, who's an investor. Please go ahead.
Yeah. Good afternoon, sir. Am I audible?
Yes. Good afternoon.
I'm sorry, Vanshi, your voice is breaking now.
Yeah.
We could hear you initially properly. But
can you share the brand-wise sales figure?
Broadly, means we can share you the segment-wise sales. Economy segment constitutes around 35% of the total revenue. Mid-premium segment contributes around 54-55% of the total revenue, while premium and super premium segment contributes around 10% of the total revenue.
Okay, sir. And this revenue contribution, do you see it sustaining in the near future, or do you see this mix changing as even your brand evolves in the coming future?
Yeah, we believe that the premium segment will perform well in the near future, and mid-premium segment will also contribute little bit more what it is contributing now.
Okay, sir. And just to build up on your speech where you said you're seeing, signs of demand recovery, and such has been the guidance by other textile players also. So then I was wondering if there is any new capacity addition that we're going to do, and so what kind of capex are we looking at?
Means our industry runs on a very light capex model, and an outlay of around 15-20 crore every year will meet the requirement of company. Recently, we are about to commission our new export unit. We hope that it will help us to double our export in next 2 years.
Okay, sir. And my final question would be on the new cutting plant that we have put up. So I had the two is there. How would it, impact our margins? Would it be helping us give us better margins?
Yes, definitely. Yeah, it will help in quality control and also control in reduction of cutting wastage, and it will lead to a better margin. And also the production cycle will also reduce. Reduction in working capital. Which leads to a reduction in working capital.
Okay. And so that capacity utilization, when looking at full capacity utilization, within a month being commissioned, or would it take some time?
It's already commissioned and production has already started.
Okay, sir. Yeah, that's all from me. Thank you.
thank you. The next question is from the line of Raj Oza, who's an investor. Please go ahead.
Thank you. Thank you for the opportunity. So I was going through our Q1 number, and I was curious to know what kind of growth are we looking in a whole FY24 year, and what would be our long-term plan, specifically growth driver for our export business?
Yeah, means our revenue, as I've already said, the revenue growth target for FY24 will be in the range of around 18 to 20%. With an EBITDA margin of around 10 to 11%. We are focused on promoting the premium segment, as well as we are focused on exports as well as modern trade. Exports, we are about to commission a new plant in this second quarter only, and we hope that we'll able to achieve 2,000 crore turnover in next 3 years.
And how much time will it take to ramp up this capacity for this export?
It's around 3-4 months.
Okay. And we have customer for that export, whatever this expansion we have done?
Yes.
Okay. My second question would be, sir, can you share some development on our online business? Because it looks like a bit soft in the growth coming from this segment.
Yeah, currently means modern trade constitutes around 5% of the total revenue, and our projections entails a strategic effort to enhance the proportion further. It's noteworthy that both modern trade and e-commerce sales have been flat, the innerwear trade is soft everywhere, whether it's online and offline. We are confident that company will meet the guidance given on revenue for modern trade segment.
Okay. That's it from my side, sir. Thank you.
Thank you. The next question is from the line of CA Akash Tanuka, who's an investor. Please go ahead.
Good afternoon, sir. Sir, just wanted to, in the presentation you had mentioned that because of the price cut, the sales has reduced, and you just mentioned that because of aggressive price strategy adopted by the industry. Sir, just yesterday, one of your peers had a conference call, and in that they said they haven't taken any price cuts in this quarter. So, sir, just wanted, if you can throw some light as to why did you take the price cut despite the industry peers not taking price cuts?
No, I don't think that's a correct statement to make, because if you look at the peer you're talking about, their results, it clearly shows a degrowth in value and a growth in volume. So that obviously will reflect there is a price cut. So from our results also, if you see there is a growth in volume, but value-wise we have degrown.
Okay, and sir, what was the price cut that you had taken in percentage terms compared to the Q4 last year?
Around between 9 to 10%, but that price cut was throughout the industry because it's such a competitive industry. You have to, be with the market. So one cannot say that we are the only one who had taken a price hit and nobody else in the industry has taken it. And going forward, we see the yarn prices trending up. So hopefully we can see a price upward revision in the near future.
So in the second quarter, because half of the second quarter is already over, so have you taken any price cuts in the second quarter, or do you plan to do so in the rest of the second half?
So the price cut we took was in the last quarter of the last financial year. We had maintained the same prices in this current financial year. So during this year, we have not taken any price hit.
Exactly, sir. That is what I just mentioned in my first statement, that your peer didn't take any price cuts in the first quarter. So just wanted to confirm you did not take any price cuts in the first quarter, right?
Yeah, we did not, yeah.
So then still your the results are, compared to the fourth quarter of last year, is considerably down, despite the price cut. And you said the volume has increased. Just trying to understand that the maths is not working out.
Hear me out. The fourth quarter for us is always heavy. So if you compare quarter on quarter, between the first quarter of the last year and the first quarter of this year, there has been a volume growth. But it will not be correct to compare the last quarter of the last year and the first quarter of this year, because the last quarter for us is always very heavy.
I'm talking in terms of price, sir, not volume.
Price is the same. Maybe the product mix has changed a little bit, but price remains the same. There has been no cut in prices in this quarter. June versus June, there is price.
Okay. And you are saying, sir, in the second quarter also there is no price cut?
No. And we are hoping for a price increase if things go favorably. Maybe before September we might have a price increase.
That would be to the tune of?
We don't know, but we are hoping like the yarn prices have strengthened up. So we might go in for a price revision, but we are not sure of what would the value would be.
Okay, sir. One last question. Sir, you just gave a guidance of 18 to 20% on your sale part, which is significantly down because you had given a 25 to 30% guidance in your quarter 4 Concall. Just wanted to confirm, are you reducing this the guidance by this bigger margin? To the tune of 7-8%, or on the higher end 10% also?
18 to 20% CAGR, if you consider that 18 to 20% CAGR, it will lead to 2,000 crore in 3 years' time. Okay.
I'm asking for the FY24, sir, not 3 years down the line. For FY24.
It will be around 23-24%.
Sir, you just said 18-20%. Just wanted to confirm.
That was on a CAGR basis. Okay, for coming 3 years.
Okay. Thank you, sir. That's all from my end.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello. Am I audible?
Yes. Good afternoon.
Good afternoon, sir. Thanks for the opportunity. Sir, just to understand, in the previous participant, you mentioned that for FY24, you will be targeting around 18 to 20% sales growth for FY24?
That was on a CAGR basis, so that we can achieve 2,000 crore turnover in next 3 years. For FY24, we might, there's an internal target much more than that. Probably 24 to 25% is the next year target.
So even if I take somewhere around 18% growth on FY23 numbers, which possibly means that in the next 3 quarters, and I do understand that generally your first quarter is the weakest quarter and the next 3 quarters are stronger. But that would typically mean that you would be doing a run rate of almost 380 crores on a quarterly basis to reach the figure of 18% year-on-year growth in sales. And even if I compare the balance 9 months to the last year 9 months, it would mean 24% growth. So where will this growth come from? The volume growth, the value growth, the price growth. What gives you confidence that in the next 3 quarters you will grow your top line to reach that 18% year-on-year growth, or the 9 months growth will be around 24% compared to the last year?
See, firstly, last year our thermal sales were not very strong. So this year we had a dealers meet and we booked good orders. So hopefully we will show a good growth in the thermal segment. And we have also launched economy range thermal product also under our John brand. And we have done good booking there also. So that would also contribute to a good value in sales. Secondly, our casual wear sales, our athleisure wear sales were almost flat last year. So this year we are seeing a good traction and we have taken out some new products there also. So from that segment also we see a good growth. And thirdly, we have started to advertise for our economy segment, which is John. We have taken 2 brand ambassadors. One is Ranbir Kapoor and the other is a local Bihari Bhojpuri actor, Khesari Lal Yadav. And those advertisements have shown a good traction between the dealers. So now we hope that the demand for John also will increase. So hopefully all these products will contribute to whatever growth we are targeting at.
So are you penciling any price growth in this 18% growth, or you are targeting a volume growth?
It will be mostly driven by volume because prices, as I said, have taken a hit in the last quarter of the last year, financial year. But going forward, I think it will be mostly driven by volume growth.
Okay. And sir, what kind of volumes we did in FY23 and the current quarter FY24?
For this quarter, the volume growth is around 5%. Last fourth quarter, we don't have a data right now. We'll provide to you separately.
Sure. And sir,
Jane, I'm really sorry to interrupt, but maybe request you to rejoin the queue as there are several other participants waiting for questions.
Thank you.
Thank you. We move to the next question. The next question is from the line of Sanjay Munjal, who's an investor. Please go ahead.
Yeah, good afternoon to the management. So my question is regarding the brand launch in collaboration with the Ajio. In the last few quarters, we were seeing that to cater the online market, we are launching a brand with Ajio in collaboration with Ajio. Any update on that?
No, not with Ajio. It was with Amazon.
With Amazon, CoBlue was already launched.
Yeah.
JioMart for B2B business.
And with Reliance, we are doing a collaboration to do contract manufacturing for them, whereas they will be buying Rupa products and we will also be making Reliance products for them under their brand name.
Okay.
So it will be both ways.
In a B2B deal. Okay.
Yeah.
And my second question is regarding the women's wear. Women's wear are going to grow at a higher CAGR than men's wear. So in the women's wear, we are having a very small market share. Like any plans on increasing that market share?
Currently, women's segment contributes around 9 to 10% of the revenue. According to us, outlook remains positive for the women's segment. We are hopeful that women's segment contribute much more than what it is contributing now.
Okay. Any plan on using our Femora brand for the women's segment for the modern trade or e-commerce?
So for Femora, we are devising a scheme where we would go very strong on the online platform. And when that succeeds, we will have plans to open exclusive stores for Femora.
Under the Femora brand. Okay.
Under the Femora brand. First, we'll go very strong on the online platform.
Okay. And when can we expect sales on the going live on the online platforms?
It will take around 5 to 6 months because we are just initiated planning on that. So by the end of this fiscal, we would start, showing some growth there.
Okay. I was asking because Femora is the brand, is the need of an hour if we want to conquer the women's wear segment. Because today word is changing towards exotic brand names. So Femora is the one which can help us. So thank you.
Yeah.
Thank you, everyone.
Thank you. Thank you.
Yeah.
Thank you. The next question is from the line of Rohit Ohri, who's from Progressive Shares. Please go ahead.
First off, Rameshji, I appreciate your presence on the call. Sir, your guidance is very important for the growth of Rupa brand. So thank you for attending the call, and hopefully you do come in the call going forward.
Thank you for joining the call, Jiboli. Please go ahead.
Rameshji, a few questions that I have, taking back to the conversation 2 years ago. Sir, any developments in terms of the contract manufacturing for some clients in the Middle East, UK or the US, if you would like to share some insights?
Yeah, we have already started manufacturing for 2-3 clients in Kuwait. We are already doing something for a client which is a big client in Saudi. And then we have orders from Germany for contract manufacturing. And as our export unit is being commissioned now, so hopefully going forward in the next quarter or the quarter after, we would see a robust growth in the contract manufacturing business for exports.
Sir, is it possible to put any number in terms of the order book for the export as well as the export which is for the contract manufacturing?
We don't have the numbers as of now. We can send you the numbers separately, but see, it is being commissioned now. So, but like one orders have been shipped, so the repeat orders should definitely come. So with all these customers, it takes time to build. But once the supply starts, they also have a compulsion to give repeat orders. So okay. That's a chain business because they will become dependent on us for quality.
Okay. So can you share some more details as to what the company is doing to increase the exposure to the women segment and the growth or the possible growth that we might see in future over the next 2-3 years in the women segment?
I think for the women segment, we are already into bra and panties. Bra, we are an old player and we are manufacturing mid-segment bra there. And under WCC which is Macron and W series, we are doing premium segment bras and ladies undergarments. And under our Softline brand, we are doing leggings and other legwear for women. So that production was being done in Tirupur as of now, but now we have shifted the production to Calcutta, where we think that the quality and everything, pricing and the costing would improve. So we see a good growth there happening after the production shift to Calcutta. So production has already started in Calcutta. So once that product goes into the market, the demand will definitely grow.
Okay. So would you like to share anything on the subsidiary Rupa Bangladesh Private Limited? Do you want to expand, or do you think that you will just let that business go away?
I'll brief you. We had opened a company in Rupa Bangladesh, but now we have appointed a dealer who will buy the goods from India, and he will store the goods in Bangladesh and appoint distributor throughout Bangladesh, in all the districts of Bangladesh. So that's a very decent development. And if that happens correctly, then we don't see a need to make the goods in Bangladesh. It can go from here and it can be distributed there.
Okay. So my last question is related to this license negotiation for FOTL. So if you'd like to share some data on that.
Yeah. See, FOTL, we have a agreement till September, end of September. But FOTL has been very cautious in renewing this license. They are doing it for every quarter. So the agreement expired in June. They renewed it till September. Now we are hopeful that they will renew it till 31st March. And thereafter, we will again ask for a renewal to continue with the license.
So they hold some inventory. So do you think that there could be a one-off or write-off that could come as an exceptional item?
We don't have much inventory. It's to the tune of around 9 to 10 crores. And we are slowly liquidating it. So we are very hopeful that by the end of this fiscal also we will liquidate the entire inventory.
Okay, Rameshji, thank you for answering the questions. I'll call back in the queue. Thank you.
Thank you.
Thank you. The next question is from Ankit Sharma, who's an investor. Please go ahead.
Good afternoon, sir. Can you hear me?
Yes, please.
You have mentioned in your presentation that your working capital has come down from 789 crore to 700 crore. Could you throw some light, sir, in terms of date that what is in Q1 FY24 your working capital days, your inventory days and debtor days?
Yeah, means working capital is reduced from March. Okay, so currently inventory days is around 203 days, and receivable days is around 101 days, and payable days is around 50 days.
And so, what would be the ASP for Q1 FY24 as compared to ASP for the full financial year FY23?
ASP, we don't have data right now. We'll get back to you. Okay, you can mail this to our IR partner separately. We'll reply to you.
One more question to ask. What are your plans to increase the retailer base in upcoming years?
We have appointed a marketing agency, and we are doing a test marketing in 3 cities. So they will be directly in touch with the retailers and making a database of the retailers in taking the wholesaler in confidence. So that mapping has started in 3 cities, and if that shows a good result, we will implement it pan-India. And for 1 or 2 of our brands, it has been done pan-India. So you were asking about the women segment. For the women segment, we have decided to go purely retail. Not purely retail in the sense we would put more emphasis on retail marketing. So for that, our Softline brand, we have gone pan-India to map the retailers. With
any particular specific city or a state that you are targeting right now as a pilot?
As a pilot, we have started in Kanpur, Calcutta and Mumbai.
Kanpur, Calcutta, and Mumbai. Okay. And sir, you have already said that you are expanding the EBOs. So what could be the, sir, average monthly sale of your EBO?
See, monthly average sale of EBO would be around, per day sale would be around 3 lakh rupees per EBO.
That is monthly you are saying, right?
Monthly, yes.
Okay. And sir, what would be your thermal contribution for this financial year FY24? I mean, how you are looking at the demand side of the thermal?
Thermal, we had a dealers meet and we had booked good orders. So I think we should be growing. From the last year, it was a very bad show. So we should be growing at around almost 40% from the last year.
Okay. And sir, what about your women's segment, the bracery that you are selling through Macroman Women's Series and leggings, your soft line? How's that going on?
That is showing a good growth. So hopefully, with the production shifting to Calcutta, I think demand will increase manifold. So that
can you? Sorry to interrupt. Can you quantify a kind of a percentage that we are seeing a growth in legging section or women's section for this particular Q1 FY24 and the targeting growth that you are thinking for FY24?
We don't have the data. I don't want to give you wrong data. So I will have it sent across. You please send this query to our IR and we will have it sent across.
Thank you so much, sir, for your answer. Thank you.
Thank you very much. We'll have to take that as the last question. I would now like to hand the conference back to Mr. Sumit Khaitan from Orient Capital for closing comments.
Yeah. Thank you everyone for connecting on the call today. I would also like to thank the management for sparing the time and answering all the queries today. Orient Capital is the investor relation advisor to Rupa and Company Limited. For any queries, please feel free to reach out to us. Thank you everyone and have a nice day.
Thank you very much.
We thank you for joining the call with us. In case you need any further information and clarification, kindly get in touch with our IR partner, Mrs. Orient Capital. Thank you for joining the call.
Thank you very much. On behalf of Rupa and Company Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.